Hi everyone, this is Malika, the author of How the Best Invest, and today I wanted to talk to you about how to make a killing in day trading. Unfortunately, the killing part in day trading came true recently. A 20-year-old man who was an account holder at Robinhood, one of these US trading apps, killed himself a couple of weeks ago because he had a $730,000 deficit in his account from trading options and futures. He was making a ton of money until he wasn't. Apparently in the pandemic, there have been 3 million new accounts these trading apps have opened up, and the markets are to some extent being propped up by these traders. I have 3 times worked with traders and on a trading floor, and so I think I have a pretty good idea about how much information goes into trading and how traders go about their business. The first time was at Lehman Brothers, the investment bank. I worked on the trading floor there. The second time was at Carbon Capital Markets. I worked with traders who were trading these very exotic instruments in carbon. And now I have a shared workspace in hedge fund land called Mayfair in London, where we have a lot of traders on our floor. And I know that emotions run high and low. These guys work super, super hard, these guys and girls, and they don't make money every year. So I think I have a pretty good idea of what you need. You need a lot of data, you need a systematic process, you need more and more computer data, and you need a community of people. There are successful traders, but they've usually left a bigger quant shop. They have backers, and they're very niche in what they do. They actually know what they're doing. Burton Malkiel has recently written a blog post called The Day Trading Pandemic. He's a professor of economics at Princeton, and also the author of A Random Walk Down Wall Street. And he quotes this Journal of Finance paper by Barber and Odian, who are professors at UCLA. And it says that active trading accounts at Charles Schwab, over a 6-year period, the active traders substantially underperformed a low-cost index. Another study said that over a 15-year period, 1% of traders were able to consistently beat the markets over a low-cost ETF, and 80% lost money. Yet another study said that only 3% of day traders make money and less than 1% make over minimum wage. So I did promise that I would tell you how to make a killing in day trading. So here's a systematic process. For those of us folks who don't work for hedge funds or investment banks and we haven't run our own trading desks, this is the only way for you to consistently make money by trading daily. And here I'm going to give you a step-by-step breakdown. So first, you register with your national financial regulator. You get lots of funding from your rich uncle or your friendly neighborhood venture capitalist. You hire a few marketing people. You create lots of TV ads showing images of instant money and very clever people. You run those ads on Facebook, etc., and LinkedIn maybe. You hire a few software programmers. You get your programmers to make these apps that are very, very easy to use and connect to all these fancy sounding stock exchanges. You get people excited to start trading with a free $100 or $500 in their accounts. It's like, oh, free money. And then you make it really, really easy for them to get started. You send them strategies and trading talks so they feel empowered to go up against the big guys. You never bill them directly for fees, just take it off the total because the market is jumping up and down all the time. They're never quite sure how much they're paying you. Then once you have this app up and running, and have all these millions of people trading, you just sit back and collect commission fees, and because that, or your courses or whatever you're running on day trading, because that is the only way an outsider can consistently make money in day trading. That is basically getting other people to day trade. And the panic is actually very good for them because people tend to be more active when the markets are down. I'm going to end with a quote, which says, "The investor's chief problem and even his worst enemy is likely to be himself." And that's a quote by Ben Graham, the father of value investing. Thanks so much.